What's good, everybody? It's Z from The Mask, and I'm here today to teach you a gold strategy that is very similar to the NAS ATKA strategy that I've taught you on the channel before, and it is a strategy that has helped me make over 270% this month alone. We're not even done with January yet, and I've only traded it for about 2 weeks, and my account is up 271% since about January 8th or 7th, somewhere around there. So this is an extremely profitable gold trading strategy, especially in trending conditions like we currently have. And it's actually extremely simple. It follows the same concept that you're already familiar with from my ATKA system, which is simply waiting for the market to give you a drop and then buying and relying on the asset's nature, being an investment asset, that it will go up again over time. And if it continues to go down, if it continues to just keep going against you and against you, you simply enter more buy positions. This is a strategy that can technically be adapted to both private and prop firm accounts, although prop firm accounts may not want you to trade this way because you are going to be holding a large drawdown, potentially for long periods of time. We're taking a quick break to talk about this video's sponsor, OsirisQuant.com. OsirisQuant is the brand new all-in-one platform for traders of every level. Whether you need a platform that helps you as a beginner trader lock in potential profits or help you protect you from yourself via your own mistakes, or you simply want a platform that actually fully automates your trading forever, 24/7 with an extremely profitable algorithm, OsirisQuant has everything you could possibly need. But for private accounts, especially if you combine this with other knowledge about trading, can make a huge return from this. Like I said, well above market return. I'm already up over 270% this month alone. And I'm currently working on a system for this for silver. I'm currently in a buy position on silver, actually testing out the system. So if that works, I will make a strategy video for that as well. But for now, we're going to focus on gold. There's two core aspects to this. It is the entry math and then the exit math. That's essentially it. In order to enter a position, you need to know how much balance you have. Now, that is very simple. You can just look in the app, look in MetaTrader, or any other trading app that you might be using to see your balance. From there, you need to know how much the smallest possible trade size is going to lose for you. So in this case, with most MetaTrader brokers, it'll be 0.01 lots of gold. That'll usually be, wait, I do that again. This will usually be the minimum size that you can possibly trade on gold with most brokers. Some may offer 0.001 lots, or you might have greater leverage that just allows you to do the same for cheaper. But with most brokers, 0.01 lots is going to be the minimum. And this trade size will lose you or gain you about $1 for this amount of distance traveled, which is a very small amount of distance. It'll be $10 for this distance, $20 for about this distance, right? So you need to have at least a few $100s in your account to be able to safely do this. But if you have an account that is above $500, you can very safely run this system. And simply all it relies on is the same knowledge that you already have from my ATKA system. You wait for a high to be created. So either this one here, or this one here, this one here. Any high counts, because the thing that matters is the distance from the high, okay? You wouldn't enter here because this only dropped about 15, 16 points from the high. So this is a little bit too small of a drop. However, this one here, you look at the high all the way from up here, all the way down to here, that is a 40-point drop. That's great. That's a 0.8% drop in this instance because gold is now at 5,000. So what you would do is simply pick a drop that's anything above like 20 points, okay? Anything above 20 points from a recent high is a good point to get your initial entry going. The reason is that it is not so common that it's going to always be disrespected, but it's also common enough to where you can get 1, 2, maybe even 3 entries per day. And this ends up meaning that you can make quite a lot of money from this. So now that we know our entry, we need to obviously know how long we are safe for. Since we figured out that 0.01 lots loses or gains us about $1 per point, if we only buy, okay, we only buy when the market drops. We never sell because this is a rising asset. We never ever open sell positions. We only buy once it drops a certain amount. However, now you say, oh, what if it keeps dropping, right? What if you have a 20-point drop like right here, and you enter a buy position and it just keeps dropping? That's where more account balance comes in. First of all, let me state, it is very unlikely that the market will drop over 200 to 300 points in a day. It's very unlikely. However, point drops, of up to 500 points have been seen on gold before. There has been times where within less than a week, it has dropped 500 points, which is why my safety net is about $500 at least in the account per $0.01 or per 0.01 lots that you want to trade. That way, even in the worst case scenario, you will likely still be safe. If you want to be safer, make a little bit less money, but have a higher chance of, continuing to keep your account safe, you can obviously do it every $1,000 or every $2,000. But keep in mind that the lot size will not change. So you are just going to make less and less percentage return while the dollar amount stays the same. But back to it. Now that you have, let's say, an entry here, right? Because this is a high and it dropped 20 points, you get into a buy position. Now what you do is you have a take profit between 10 to 20 points above your entry. This is similar to the NAS-ATKA system that we had, in that the TP is a similar size to the drop required to enter your first position. So in this case, the TP would be about here, somewhere like that. Now with 0.01 that we have up here, this will make you about $10, right? This $10 on a $500 account is 2%, which is a fantastic daily gain. But then something else happens. You're now technically creating like new highs over here. You have a new high here. So now 20 points would be like down here. So now you have a new entry over here. But what happens here? The market just keeps dropping, right? From here, you enter the scaling protocol. From here, you wait 30 points, then 40 points, and then 50 points to enter each new position. So we see here, this is our new position. And I'll just get rid of this one. Our TP will be, where's our TP? Roughly here. So our TP will get hit over here. Roughly here is where our TP gets hit. However, like I said, the scaling protocol goes up 10% or 10 points every time. So your initial drop was 20 points. Now you wait for 30 points. What do we have here? We have 30 points. So our second entry is down here. Again, you can only do this if you have enough to actually allow yourself to do this. So if you have 500, you can only enter one position. If you have 1,000, you can enter two positions. If you have 1,500, you can enter three positions, and so on and so on. Every $500 to $1,000, you can add one more position and still be perfectly safe. Over time, you will increase that number, so you get safer and safer. But for the time being, at the start, $500 is going to be more than fine. So here, now we have a third position in the market, right? Or a second position in the market. And this one's TP is actually also going to be this one here, which is another thing that you'll be familiar with from my ATKA system. It's the exact same take profit method, where all positions actually use the first entry's take profit level. And what this ends up meaning is that even though you only added one position, you quadruple your profit. Because look, the distance from here to here is 10 points, right? The distance from here to here is 40 points. So even though you only increased your risk by 2, you actually increased your profit by 4. So you have a disproportionate gain by adding more positions. And then what would happen next? You add another position 40 points below this one. So that would be right down here. If the market continues to drop, and provided you have a large enough balance in your account, or equity, whatever, if you're already floating profit on other positions, this position here now also takes the same profit up here. This means that this one now makes 80. So in total now, first off, you would have made $10, right? Which is great. That's 2%. That's fine. 2% is lovely. But then you doubled your risk, but 4x your money, right? Now you tripled your risk. However, you now have 80 points plus 40 points plus 10 points. That's 130. So what you have essentially did with this position is 3x risk, but at the same time, you have 13x profit between this point here and this position right here. And this will continue to scale over time. This continues to just go up and up and up. As you get further down and the market goes against you more and more, the rate, like the rate at which your profit disproportionately grows compared to your risk, continues to go up and up and up, which is why this system can make you so much money so fast. Because now what ended up happening is you have $500, right? Let's get rid of this real quick just to make it less messy. You had $500 here, you had $1,000 here, you had $1,500 here, right? This 500, if it immediately went to TP, gained 2%, okay? This, if you had 1,000 and you got $50 or 50 points of profit, would have made 5%. And now this one at 1,500 balance, making 130 points, that's almost 10%. That's like 8.5%. So you see the risk keeps going up linearly, okay? It actually goes up less and less as well, because once the market has dropped these 40 points, it obviously can't drop those 40 points again, right? Like this distance is now already not losing money. So technically your risk actually goes down over time while your reward continues to go up and up and up and up and up, which is exactly why this system can be so profitable. And it's exactly how I managed to make 271%. So far, we still have a couple days left, but 270+% this month alone, trading just gold. Again, this is super, super simple. Another thing you can obviously do if you have a large enough account is instead of adding more and more positions, you can start to scale the first couple positions up. So let's say you have a $2,000, $3,000 account. Instead of just adding 6 positions down here, what you can do instead is just double the size of this one, double the size of this one, and double the size of this one. That way you will effectively have the same lot size overall, but you'll make more money from each position. Because another thing you have to keep in mind is that the larger the drop is, the less commonly it happens, okay? If we go ahead and just, if I do that and then quickly clear everything, if we look at this, can you see how many times you have a drop like this? It happens like 5 times a day, right? It happens so often that you have a point drop of 20, 25 points. But how often are you seeing a point drop that's like 60 points? How often is that happening? In this whole screen, you can see like 10 different instances where the market is dropping 20 to 30 points. But there's only one instance, one single instance where it's dropping like 60, 70, 80 points. Because as the point drop increases, so does the rarity that it happens. These smaller drops are going to occur a lot more often. And because they occur a lot more often, it makes sense to scale up your first position, because there's a very high chance that this first position immediately goes back up to hit your take profit. Let's go over it again. You just need to understand for this strategy, okay? You just need to understand how much money you have in your account, okay? How much money the smallest possible trade size loses you, and how much the market can go against you, essentially, before your account is blown. And then you simply multiply that by whatever trade positions you want to take. So if you have $500 in your account, you can only take 1 trade, okay? If you are a bit more experienced, if you're a better trader, if you're not a beginner, because I'm not a beginner, well, obviously I came up with this strategy, but I'm not a beginner trader. I've been trading for about 5 years and 3 months now. So I have a good bit of experience. I can spot market patterns. I'm familiar with gold. I'm familiar with NAS. But if you're a brand new trader, $500 to $1,000 per 0.01, okay? Again, if you're more experienced, you can bring that down to 200, 300 because you'll be able to read the market a lot better. But if you're a beginner, keep it at around 500 to 1,000 in your account for every 0.01 that you want to open. And then what you simply do is wait for a drop of 20, 25, 30 points from a high, okay? Whatever recent high. Okay, if you're looking at the market and all you see is this, then this right here is your recent high. If all you see is this, then this is your recent high, okay? If you're seeing something like this, right? Obviously you can't see into the future, but like this is your recent high. So you wait for the drop, you enter a buy position, it hits take profit, and you're happy. You can then either be done for the day or set another buy limit, hit take profit again, whatever you want. But again, all you need to know is how much you can afford to lose, right? How far the market can go against you. So again, about $500 per 0.01. And then you simply enter a buy position after a 20-point drop, enter another buy position after 30, another after 40, another after 50. And then once you're at 50, you can decide to either go further and go 60, 70, 80, 90, 100, or you can just keep staying at 50, 50, 50, 50. That's entirely up to you. And then the next thing is that the take profit is always at the same level. It is always at the level of the first position's take profit. And the first position will have 10 to 20 points of a take profit. So then the second position, let's say the first one has 20 points. That means you have 20 points plus the distance between the first one and second one. So 30 points. That's a total of 50 points. It's much easier if you do this by price instead of by points, because then you can simply say, oh, my TP is at 4,980, and then this one's at 4,980, and this one, it'll be much easier for you. But just to understand the math behind it, they are all at the same location. And I think that's actually about it for this strategy. It might sound complex, it might sound a little bit silly at first, but I promise you, if you try to spend some time with this, even on a demo account, like please try this on a demo account first. But once you get familiar with this strategy, you will see that this very, very quickly can become a good system. You can obviously, like I said, combine this with other things, right? You could combine this, for example, with normal market entries. Like we have here, we have a break of structure to the upside, and then we retest a fair value gap here that was created in the break of structure. So this could be a really good entry opportunity. And then from here, you simply have 10-point or 20-point TP. Because this system, again, is just buying and holding gold. So you can use any entry method that you want for the buys, as long as you have enough money in your account to hold the position, because you don't need a stop loss. You simply just hold it until it's in profit, until it hits your take profit, because gold will eventually go up over time. So you can use whatever entry method you want, whether you want to trade breakouts right here, or you want to trade fair value gap retests, or you want to trade like order blocks or something, or you just want to trade the point distance the way I do. All of that is fine, because as long as it's a buy, gold will eventually go to your take profit, because it's an asset that always goes up over time. If you look at like the daily on gold, gold always goes up over time. Look, you buy right here, you buy right here, you buy right here, it'll all go up over time. The biggest drop, the reason I'm saying like 500 points, was this over here, which was about 500 points right there. So just in case something like this happens, I want you to be safe. Most drops will look like this: 2 to 300 points, 2 to 300 points, 2 to 300 points. They won't be 500 points. But again, I want you to be safe. I want you to be able to survive those kinds of drops. But either way, this system is extremely simple. Once you spend like just a couple minutes getting familiar with the math, getting familiar with the logic behind it, this is an extremely simple system that anyone can use. As long as you have the minimum balance to throw one single position into the market, you have guaranteed profits. You can do this for prop firms. Again, they might not like it that you do, but it is technically possible. But I would suggest doing it on a private account, just so you can be a bit more aggressive, make more money faster. But that is about all I have for you in this video. Relatively quick strategy video, just a quick 20 minutes here. Simple strategy. You guys can make money off this like today. So I hope this was useful to you, and I will see you in the next one.